Hello and welcome. In this video, I want to simply explain how Forex trading works and how we can make a profit. So Forex trading means exchanging one currency for another. For example, you might sell dollars to buy pounds. The price of buying or selling a currency is determined by the currency exchange rate. For example, if the exchange ratio is 1.2 for pound to USD, you need to spend $1.2 to get 1 pound. Or selling 1 pound will give you $1.2. For another example, you will need to spend 160 yen to get $1, or selling $1 would give you 160 yen. Now, how can we profit in this market? In Forex trading, we aim to predict the exchange rate between currency pairs and profit from the difference. For instance, the exchange rate is $2 for 1 pound. So, we have to spend $2 to get 1 pound. Later, if the exchange rate increases to $3 per pound, we can sell our pound and get $3, making a profit of $1. So in Forex trading, there are two main activities. The first is called going long or buying. For example, if I decide to go long on Euro to USD, it means that I'm giving my dollars to buy euros. Suppose the exchange rate is $2 for 1 euro. If I want to buy 1,000 euros, I will need to pay $2,000. Like previous example, the way I can profit from this is if the exchange rate increases. If I initially spent $2,000 to buy 1,000 euros and later the exchange rate rises to 3, I can sell my euros back. Selling my 1,000 euros at the new rate of 3 would give me $3,000 and resulting a profit. The second activity in Forex trading is shorting or selling. If I predict the value of the euro will decrease compared to the dollar, I can sell euros and buy it back with a better price. For example, if I go short and sell 1,000 units of euros at an exchange rate of 2, I receive $2,000. Later, if the exchange rate decreases to 1, I can buy back euros at a lower price. With my $2,000, I can now purchase 2,000 euros. This results in a profit because I initially sold 1,000 euros and then doubled them. Now I want to talk about opening and closing trades using my previous example. When we open a trade, we are essentially making a decision to either buy or sell a currency pair. To complete this trade, we must eventually close it. If we initially buy a currency, we later sell it back to close the trade and determine whether we made a profit or incurred a loss. Conversely, if we start by selling a currency, we eventually buy it back to finalize the trade. In summary, opening a trade means that based on our market prediction, we enter a position to buy or sell some currency. And closing a trade occurs when you decide to exit that position to receive a profit or loss. The difference between the opening and closing prices determines your gain or loss. In Forex trading, we exchange one currency for another. The exchange rate indicates how much of one currency is needed to obtain another currency. The first currency listed in the exchange rate is called the base currency, and the second is the quote currency. This exchange rate shows the value of the base currency in terms of the quote currency. In this picture, $1.211 equals to £1. That's it for today's video. I see you in future videos.